Things are getting pretty shaky in the market right now. We had this massive run and the economy is terrible. So it's looking like prices might be topping and we might be heading to that second lower low that I talk about in all these videos. So if that's the case, then some of us might want to look for some safer positions to put our money into in the market. And one area of safety where you get a good return is dividend stocks. But when the economy is this bad, there's also risk in those stocks too, because those dividends can get cut. So in this video, we're going to go over some special dividend stocks where the dividends are actually guaranteed. Now, these are some really unique names that you've probably never heard of. I've never heard of them before doing the research. You're not going to find these names anywhere else on the internet, so you're going to want to pay attention to the video. But before we dive into those dividend stocks, Strategy Builder Pro is open right now. This is our training program that teaches you how to build a professional investment strategy. Enrollment is only open until Sunday at midnight, so you should really sign up today. There's a link down below in the description and comments. And whether you've been in the game for years or you're just starting, there's a lot in this program that could help you improve or even just start a new strategy. And what's been interesting about this bear market rally that we've had, this huge upswing, is that it's pulling in a lot of new people to investing. And these beginners, I've been looking at the comments and I've been getting emails. They're super excited, but me over here, I'm just scared for them because it's the same way that I was when I first started. I was super excited and I had some success right away because the market was strong when I started, and then I got smacked really badly. I had all these profits and then I lost all of them plus more. And the reason why is because, I didn't have my investment strategy in place at that time. So when I get questions about, hey, AK, when should I buy this stock? Or hey, I've been holding on to this for a while, should I sell it? Or how much should I invest into these airlines? Those are all questions that should be answered before you even put money into the market. But obviously you wouldn't know that if you didn't have the training, which is why it takes people years to figure out the right things to do in the market, and most fail. Like that statistic, the 99% of traders fail, that's true because they never get the right information and they never get what they need to build the right investment strategy. That's why we put together Strategy Builder Pro, because it's the shortcut that I wish I always had when I first started. And honestly, a lot of the stuff in here is pretty advanced, so I wish I had it even when I was more experienced and had years under my belt. It wasn't until I got in talking with other fund managers that I learned some of this stuff. So if you want to go super fast from zero to professional, definitely check that out. Link down below in the description and comments. It's only open until Sunday at midnight. So do it today. Get started today. Okay, so these special dividend stocks I was talking about are called preferred stocks. You might have heard of them before, but from what I've seen, they're not too popular because they're a little more complex than your normal dividend stock. So preferred stock is a cross between a bond and a stock. So they trade similar to common stock, which is, just the regular shares that you can trade on Robinhood, because you could buy these the same way, but there are a few differences. So if you're holding preferred stock, then you have a priority on dividends over people who are just holding common stock. It's like a different class of shares. So if, for example, Apple pays a 2% dividend on its common stock and a 5% dividend on its preferred stock, the 5% dividend would take precedent on the payment hierarchy. All that means is that you are going to get paid first because you're like a preferred member. When a company files for bankruptcy, preferred stockholders receive payments ahead of those common shareholders. But, after the creditors and senior secured debt and bondholders, which that's all like debt hierarchy. But you're at the top of the hierarchy when it comes to equity shares. But also as a preferred stockholder, you don't have voting rights. Common shareholders do, but how many of us are even using them? Also, when you get into preferred stocks, you're not really going for capital gains. Like you're not looking for a move in the price of the stock. Really, you're just going for that dividend, which is also why it's higher. Now, there's also some differences between types of preferred stocks. So for example, there's cumulative and then there's non-cumulative preferred stock. So for the cumulative ones, for the dividends that aren't paid out right away, they're actually kept in a separate account at that company. So they accumulate even when they're not getting paid out. And then they should get paid out over time. So basically they will square you up later if you're not getting paid today. And those dividends that are gathering in that separate account must be paid before common shareholders can receive anything. So again, you're that preferred member, so you get that special treatment and you get that money first. Now let's jump into some of these names. First one is Brookfield Property Partners, BPYPP. You can see the chart right here. It's pretty much flat for most of its life, and then it had this huge dip, which is why preferred stocks are such a great deal right now, because their price dropped with the rest of the market. So you can get them at a huge discount. So Brookfield owns, operates, and invests in commercial and other income producing property on a global basis. So they're like property managers. Right now they're trading at a 30% discount, and they have a 6.5% annual dividend. And what's nice is that they do not have to redeem the preferreds in the event of a change of control or liquidation scenario. Now the risk here is that most of this company's investments are shopping malls and office buildings. And as we've seen, because of this whole coronavirus thing, a bunch of companies just aren't paying rent because they can't afford it. There's no revenue coming in. So the next couple of years are going to be rough. So it wouldn't be a big surprise if the common share dividend dividends were halted. And yeah, that's probably what's going to happen to a lot of great dividend paying stocks. But that's why we're looking at preferred shares. Those cumulative dividends provide protection. At some point, you will get paid that money, at least before they pay out the common stock dividends. Next stock is Tsakos Energy. I think that's how you say it. TNP. TNP is a holding company. They transport both crude oil and natural gas. So they got a fleet of tankers. Right now they're trading at a 30% discount, and they got an 8.75% annual dividend rate. So pretty great. Now you guys have probably already seen that oil video I did talking about the shippers thesis and how they're about to explode higher because of the whole oil collapse and negative prices. Well, this company might benefit from that. Oil is in contango and charter rates are through the roof. Shippers are going to make a ton of money. So it wouldn't be surprising if TNP generates a bunch of cash and then pays out all their preferred dividends. They'll pay it out while the going is good. Next, we got Costamare, which is an international owner of container ships. They're trading at a 31% discount. Oh, and the ticker symbol is CMRE. Cumulative dividends are about $1.90 per year. So CMRE is actually trading at a 50% discount to its net asset value. And they've had 13 consecutive years of net income profitability. So you're getting a 7.625% dividend from a company with 13 years of consecutive net income profits and industry tailwinds. Pretty good. Next, we got Golar, GMLPP. So they're in the transportation and regasification of liquefied natural gas. They're trading at a 52% discount. And then we got Save Bulkers, SBD. So they're an international provider of marine dry bulk transportation services, trading at a 40% discount. And they got an 8% cumulative dividend rate. And what's great about them is that they paid the annual dividend each of the last 5 years. And they're currently profitable, and they've got pretty good margins, so it should continue. And then we got New York Mortgage Trust, NYMTP. So they're a REIT, a real estate investment trust, and they're focused on residential housing related assets, trading at a 62% discount, and they have a 7.75% cumulative dividend. So those are some potential dividend stocks that you could add to your portfolio. But before you invest in any of them, make sure that you do your own research and you have your own strategy in place. And if you don't have that strategy in place or want to improve yours, then once again, we have Strategy Builder Pro open right now. Open until Sunday at midnight. You could learn more and sign up by clicking the link down below in the description and comments. You'll go to this page where I'll explain a lot more about how it works. So check that out and make sure that you subscribe to this channel. That way I'll see you in the next video. Stay fallible out there. Bye.